Daily bank failures. That is the warning here in the United States today, because a CEO of one of the largest real estate firms in the US that has over $115 billion in real estate assets is warning we could see one bank failure per day. That's troubling. I want to explain why this is, why banks are so concerned about people pulling their money out, even though the bank is solvent, they're good, nothing to worry about. People are starting to pull their money out for other reasons. I want to explain why this is, and you may be one of those people. So make sure you stick around and watch this entire video. But all I ask is one thing, it takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So are you one of those people that heads to the bank and says, give me my money. I need my money today. Well, this is happening more and more than you think. And one of the reasons why people are going to their banks and asking for money is simple. They think they can get their money to work harder than it is currently working in a bank where you get maybe 0.1% interest, if that. But look what billionaire real estate investor Barry Sternlicht had to say. It says billionaire real estate investor Barry Sternlicht says he expects at least one bank failure per week due to real estate loans. That's a fragile animal right now. Now you're probably thinking, wait, didn't you say daily? Yeah, I did. Because then he went on and he had this to say. He said, and I quote, I think people are looking for these cracks, and you're going to see the cracks develop now. You're going to see a regional bank fail every day, if not every week, maybe 2 a week. So we could go from one bank per week to potentially 7 banks per week, 1 a day. That is a huge difference. Now I want to point out one thing and just be very clear on this. He is saying that we could see banks start to fail at a tune between 1 to 7 banks per week. However, we are already into May. It's currently May 9th. We've had one bank fail in the United States in 2024. So is this concerning? Yes, because of what he's saying and where the money's going. Because again, I'm one of those people as well. I don't have all my money in the bank. And I've gone to the bank to take money out for these exact reasons. But I want to show something to you. Look at this. It says there's $929 billion in commercial real estate debt is about to come due. Well, America's regional banks survived the storm. Well, here's the thing. This money is going to come due in the second quarter of 2025. So we still have about a year before all this money is due. But as of right now, people are unloading these office buildings. Banks are selling them for pennies on the dollar. Okay, pennies on the dollar. Look at this. It says an investor buys Michigan Avenue office and retail building at a discount. We've seen just in the past, I think, few days, there's been some massive commercial buildings in San Francisco that have sold for pennies on the dollar. One person lost in a span of 2 to 3 years. They lost about $100 million because of what they paid for their office building versus now what it sold for. It's a massive loss. $100 million. That would make me sick. Now, obviously, if you're worth hundreds of billions of dollars, that might not mean much to you. But to the majority of people and to many cities, you lose $100 million. That's a massive loss. I want to read something to you. Look at this. It says one New York office building shows the stress in the $20 trillion commercial real estate market. It says WeWork and Macy's and balloon payments. Oh my. Here's what's happening. If some of these businesses are not able to rework their loans, okay, go and get out of the balloon payment. The payment's going to balloon up. They will not be able to afford it, and then those office buildings will go back to the bank anyway. Here's the problem. The banks can't afford to keep them. They have to unload these. I want to read this to you. It says 1440 Broadway is a 25-story building at the corner of Broadway and 40th Street in Midtown Manhattan. not far from the bright lights of Times Square and the grubby dishevelment of the Port Authority bus terminal. Designed by Starrett and Van Vleck and completed in 1925, its brick and limestone facade is a prime example of a classic New York architecture. Today, 1440 Broadway is also emblematic of tensions in the $20 trillion market for U.S. commercial real estate too. Says the serious delinquency rate for office loans reached 7% in April, its highest level since early 2017, according to data from JP Chase. The jump was driven in part by the $400 million loan backing 1440 Broadway, in which was bundled into commercial mortgage-backed security known as JP, blah, blah, blah. One of the loans responsible for this meaningful month-over-month increase was the $399 million 1440 Broadway loan securitized by JP Morgan 2021 1440. JP Morgan analyst said. Anyway, sponsors of the deal failed to pay the loan's balloon payment last month, and now the loan is considered non-performing matured. This is all happening. This just happened last month. Okay? Couldn't pay the balloon payment. I'm not here to tell you that everything's going to be fine. I'm not here to tell you we're going to see banks fail. The big banks like JP Morgan and Bank of America and Wells Fargo and all these banks, they're not going to fail on a daily basis. We're going to see the small regional banks, the little ones, the ones that have potentially $1 billion to maybe $4 billion, maybe even a couple $100 million in assets. Those are the banks that are going to fail, not the ones that have $50 billion in assets, $300 billion in assets. That's not what we're going to see. We're going to see the small banks. But as these small banks start to fail, it's going to impact the bigger ones, because now the larger banks have to gobble these up. They have to go and assume the debts, assume the assets. They have to protect the people. With that said, when a billionaire of one of the largest real estate companies in the U.S. is warning that we are going to see between 1 and 7 bank failures every single week, that's troubling. So here's what I can tell you right now. The only thing that's going to save these banks is if the Fed comes out and cuts rates. That's it. The problem is the Fed cannot cut rates until two things happen. Number one, we need to see higher unemployment. But at the same time, unemployment cannot jump to 5%. If unemployment goes to, let's say, 4, 4.1, maybe 4.2, that's fine. But if it starts to get close to 5%, then the Fed is going to have to incentivize companies to go and try to hire more people. But we cannot jump over 5%. That would be horrible. The second thing, we have to see lower inflation. If we don't see inflation go down, the Fed is not going to cut rates. And if the Fed cannot cut rates, banks are going to fail. So, I will leave you with that, but just understand the warning right now is we could see one bank failure every single day for the rest of 2024. So, we'll see what happens. All I can tell you is I will be here every step of the way. I'll fill you in on all the latest news and updates, but as of today, that is what we know. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.